From the yellow metal to the grey one, and Bluescope Steel has turned around last year's losses, posting a profit this year of $126 million, with aggressive cost-cutting helping the bottom line. But with iron ore prices riding high, is the company right to be so bullish about the year ahead? Well, earlier I spoke to the CEO, Paul O'Malley. Paul O'Malley, welcome to Late Line Business.
It's a pleasure to be here.
Your results were given great impetus by your Asian operation. Now, that was quite an ambitious investment a few years ago, now bearing fruit.
Yes, we've spent a number of years trying to work out the best way of being successful in Asia, and we're very happy with both the improved earnings out of Asia, well over $120 million turnaround year on year, and the sustainability of those earnings at the moment. So it's not been easy, but we're getting there.
They were more than your domestic operations.
For the first time ever, the performance out of Asia has been the best performing segment for Bluescope, and that's certainly a record.
And you believe that the steel price has now bottomed?
Oh, look, the steel price goes up and goes down. Over the last couple of months, we have seen a $100 a tonne, there enough drop in our export business, but it's ticked up a little bit in the last week or so by about $20 to $40 a tonne. So on that basis, I think it has bottomed for the moment.
What's it going to take for steel prices to really improve now? Because the Chinese are very much your competitors as well as your customers, aren't they?
Oh, look, China represents the largest steel industry at the world at the moment. Global steel demand is about 1.3 billion tonnes, of which half is produced and consumed in China. But China does a pretty good job of keeping its steel from a production perspective within China. I think if you step outside of China and look at the rest of the world, we need a rebound in the developed economies in Europe and the US to see a sustained rally in steelmaking margins.
Your guidance was pretty upbeat, but you talk about margins being squeezed and raw materials prices rising much faster than steel prices. Isn't this a concern going forward?
Look, we see a continued good performance out of our Asian businesses. We think we'll see the continued benefit of our cost reduction activities, but there is no doubt that we had a very good Q4 because of margin expansion, but I think we're seeing margins squeezed in the first quarter, and that's what we talked about a bit today. We did also, though, announce that the board had made a decision to reinstate the dividend, and I think that takes a view that the medium to long-term future looks reasonably good.
If Labour do win this election and the minerals resources rent tax comes in, presumably there's an issue there for you because of the knock-on effect of an increase in iron ore prices.
As a company, we've seen our raw material costs increase by a factor of 3 over the last 5 years. We spend around $2 billion a year in Australia now on iron ore, coking coal and other raw materials. As a steelmaker in Australia, it is fundamentally important that we maintain our cost competitiveness relative to international steel players. So we'll be talking to whoever's in government to ensure that they understand the importance of Bluescope Steel being cost competitive.
Now, one of your new strategies is to consider raw material opportunities that reduce your raw material cost base. Presumably buying an iron ore miner would be in the mix there.
We consume about 7 million tonnes of iron ore a year. At $140 a tonne, that's a $1 billion spend. We have to look at ways through the cycle of ensuring that we lower that cost. We need to do what we can to ensure that more mines are developed, more iron ore gets to the market, better access to infrastructure, and if that involves some type of investment, we'll consider that, but only if it delivers us a lower cost of iron ore through the cycle.
And BHP won't think much of that, I imagine.
We have to do what's in the best interests of Bluescope and its shareholders.
OneSteel will be reporting tomorrow. As a potential investor, what's the attraction of Bluescope over OneSteel? Because they actually own their own iron ore miner, don't they?
Well, we have an iron ore mine in our New Zealand steel business, so I'm going to claim some iron ore investment opportunity for Bluescope Steel shareholders as well. We have at Port Kembla Steelworks a world-class, world-scale steelworks that produces really good quality product. In our Asian business, we have what we think is a great growth platform to sell steel into the building and construction markets of some of the fastest growing regions in the world. And we see some opportunities now to take that experience into other high growth developing economies. So plenty of growth at Bluescope, but we've got to maintain our cost competitiveness, and that's our day job.
Paul O'Malley, thanks very much for talking to Late Line Business.
Thanks for your time.